Welcome back, traders. This is the Options Trader Lounge, and today we are going to be going over the weekend recap. Last week, we saw major moves take place within the tech sector ahead of earnings, and we have major earnings reporting this week, so we're going to be discussing that in today's video. So if you haven't already, please go ahead and like the video, hit the subscribe button, that way you're not missing any of our videos. Also, if you find anybody or know anybody that would be interested and would find use of this video, please go ahead and share it. We would greatly appreciate it. Now, without further ado, let's get right into it. Welcome to the Options Trader Lounge, where we talk about generating income and growing your wealth within the US stock market using options. Thank you all for tuning in. Get yourself a drink, sit back and relax. Now let's get right into it. Now, we saw a incredible move, a whipsawing move that took place in the stock market. Right now we are looking at the triple Qs, and the move that we want to focus on today is what was taking place in the tech sector. This is the weekly candle, the weekly chart of the triple Qs, but if we zoom in a little closer, we could see what took place. Off the high at 387.98, we saw a rejection that led a pullback all the way down, which resulted in a exchange of a 3% decline on the triple Qs. Now this is very important because on Friday we closed literally at the low, setting a closure at 3% deep down in the money. Now this is sitting at the 15 EMA, and off of this move alone, I have no doubt that a lot of people are feeling stressed at this moment, especially if you haven't been watching our videos. You would have known that this move was coming. Well, actually, you would not have known that this move was coming because there's no 100% certain of what we can expect in the market. But what we were doing up to this point is we were preparing for an outsized move, an unexpected move to take place in the market. That is what we had done to prepare for this moment. Now, if you were caught at the top and you were buying at the top, you are deep in the water, knees deep, head deep, very deep. So what do I have here for you? I have a solution. Well, the solution that I want to give to you is a way to reduce stress. And what I have found was a research from the Hopkins Medicine Organization, and they say that by simply petting a dog, it lowers stress levels. And I want to say that it's not necessarily just dogs, but I want to say that it has to do with things that are furry. Things that are furry and calm and peaceful. And if you haven't seen the news over the weekend, well, there was a news article that is literally that could literally help you solve this stress problem. Sometimes owning a dog could be very expensive to do, but if you just take a trip down to Florida, well, there's a community full of rabbits that are essentially free. A homeowner has left this community and left their rabbits out in the public or out in this community, and now they are multiplying by the hundreds. So if you take a trip down to Florida, you could pick up a free rabbit to help with your anxiety. So that is what I have for you today. If you haven't been watching this channel, you would have avoided this stressful event. But if you're caught in this stressful event, go ahead and book a trip to Florida and get a free rabbit. And these are not just any rabbits. These are rabbits in need because these are lion mane rabbits, something to do with their furriness of how fluffy they are. They can't survive the Florida heat this summer, so they're dropping dead because of getting heat stroke. So save the rabbits, save yourself from stress, and done deal. Now back to the charts here. Looking at the triple Qs, this is very important. Whenever we see a weekly close just like this, let's go back to the weekly close. We are essentially seeing a rejection candle, and this is what you call a shooting star. Now it's very important to really look at this closely because whenever you see a rejection candle like this, and when we see its location of where it's formed, what we want to watch out for is the move after. the move after is going to be very telling of where this overall direction is going to go. We also have to remember that no market goes up in a straight line in whichever direction. If it's a down market, it does not go up in a straight line. There is always going to be some sort of pullback to the mean, just like what we've seen back here in this down market. A pullback to the mean. And what we are currently seeing in the past, I want to say, what this is like 6 months since the beginning of this year, we have seen an incredible bull run. You could attribute this to short covering because of all this bearishness that was built up the prior year. And finally, we are seeing a rejection at this level here. And if you look at this level, this is really correlating back to these highs back here in August of 2021. And it's very important to note because a rejection at these levels and would result a move to the mean. And we cannot ignore the fact that this weekly close is right in the midst of earnings. And as we've seen, what was it, Tesla and Netflix, they pretty much resulted or reported good earnings. They had great sales on Tesla, and then they also had phenomenal sales on Netflix, but the overall stock failed. The reports came out good, but the stock reacted negatively. And so, does that tell us? Is that a telltale sign of what's about to take place in the next few earning report? I mean, if we take a look at it here, these are what we have in store for earnings. Let's take a deep dive in this. So what we have for earnings, especially something that's going to be watched heavily, is going to be the Tuesday close. We have Microsoft, Alphabet, which is Google, obviously Snapchat, and we have Visa. These are going to be major companies that we are going to be wanting to watch because depending on how these stocks report this week, it's going to tell us how the rest of the market is going to flow. And we just got to be prepared on that. And ultimately, we do not know how these stocks are going to react to their reporting, but you could take the few stocks that has report and see how they behaved. They're selling off on good news, and it could be a more justified move to pull back to the mean. And if we pull back to the mean, what would that mean be? Well, sometimes I like to look at different indicators here. If we were going to go off of the moving average, the 15 EMA, which hasn't been tested in quite a while, is all the way down at 350 on the triple Qs. Now, if we look at the Bollinger Band, which is also a really good indicator that we could monitor, the weekly chart is at the mean would be 338, but if we look at the daily chart, like what we have here, it's at 371. So it could fall further, and we were already shorting at the highs as a hedge. And once we saw this candle down here, right? Once we saw a gap down the following morning, we were already shorting the market heavily. And so that was a really good day to really short because the following day just was completely weak. If we look at the 15-minute chart, we can see this collapse in the tech market. And what happened the following day? Well, you saw this, you could say short covering, a slight short covering, or a possible, early buyers trying to buy into the market. And what happened? It sold off the entire day at the lows, hitting the lows at 375. So this is something that we have to really pay close attention to because we are currently seeing a shift in momentum, right? The shift in momentum can really result in a total collapse in the market, just off of like simple news. Because at this point, people are starting to get a little greedy, and you're starting to get uh, a narrative shift of good earnings reporting, reporting with bad stock price movements, and it's only a matter of time until the media outlets would start changing their shift and their tone on the stock market that this well that the stock market is not going to reach its all-time highs in the next few months, but you never know what's going to happen. So all-time high would be at 408 on the triple Qs. And so, I don't think we're going to hit there within this earnings season. But obviously, with this rejection on the stock market, if it falls further, then it's going to shift the direction, possibly form some consolidation sideways before we move higher. Just think of it this way. Before we can even make a move higher, it's going to want to build up some sort of compression in the stock market, right? Think of it as like a balloon before it pops. That's a bad example because this is probably a balloon right here with all this buying action here, and we could see a pop at the bottom, at the top, and then the market falls. But think of it more as like think of it as if you're trying to slingshot a rock, right? You want to build up some momentum before you rip all the way up to all-time high. So before we even get here, some consolidation sideways would be, a good idea to take place in the stock market before it could move higher. Some sort of reset would be great, because nothing moves up in a straight line. There's always ups and downs in the market. And so that is what we might see take place in the next few trading days for earnings. And then possibly at the end of the year, we could test these all-time high and possibly continue this bull market higher. Now, looking at the SPY, we saw a similar move, but not totally dramatic as the triple Qs. Obviously, we saw this doji on the daily candle, but the following 2 days was a sell-off and then a close near the lows on Friday. Looking at the weekly chart, we don't have a strong of a doji that we saw in the triple Qs. Obviously we saw a rejection at these levels here. The same correlation back here in August, we saw it reject off of those levels. And it doesn't have to be an exact science, right? It could be, you could look at price levels as a range. So anywhere from 10 points up to 10 points down, that's the range that it could trade in under. So pulling back to the mean would mean on the weekly candle would be 420. If it pulls all the way down, it could consolidate sideways before it moves higher, and it's ultimately going to come down to the guidance that we're going to get on all these major companies, because the guidance is what's going to tell us and forecast what these big companies are actually thinking on how they perceive the next few quarters to next few years on how the company is going to perform. Because as we know, with higher interest rates, these companies are going to have to adjust their tactics as far as generating sales, because the whole idea of uh, raising interest rates was to lower the demand. And if we get that lower demand, that's a lower in consumption, that also means lower in sales, and it's going to affect the margins, the profitability of these companies. So we just gotta prepare for those kind of events. Take it as it is. As traders, we have to just look at the market as what it is and manage our risk. Whenever we pick entry points in the stock market, you are committing to, well, you should commit it to a direction, and you should commit to a particular stop level in the trade and a profit exit point in the trade as well. So you always want to put all those things in together before you commit to a trade. And once you enter the trade, you just trade it as it is. The whole idea is to trade stress-free. And again, if you are not really good at that, you want to either lower down your size on your position that you're going to take on either direction of the market, and maybe get one of those bunnies and Floridas to help you and cope with that stress. But the whole idea, whenever you're trading, is to really, first of all, manage your risk to a point where whatever that loss is going to be is not going to totally jeopardize your account, because the whole idea of trading is to be able to put in multiple reps, multiple occurrences of your strategy on whatever it is. If it's dip buying, you're putting a stop point and a profit exit. If you're trading the mean, or if you're trading a range, you gotta figure out those levels for yourself. You know, if you've seen my other videos about how to trade and whatnot, please go ahead and check out those videos. It could be helpful in your trading. So back to this video again. You know, along with the SPY and along with the triple Qs, we also want to watch the VIX, and the VIX is very interesting. I was pointing this out in my prior video that we want to take a close look at this because what I had mentioned earlier in the week was that if we saw a lower high that continuously moves higher, as we can see higher lows, if we start to see this, this could mean that we are preparing and the markets are anticipating a pop in the VIX. And if we see a pop in the VIX, we are essentially going to be getting a sell-off in the market. Now, this is going to be pretty, I mean, you could use this as a almost of a prediction, tool as a strategy that you could use whenever you're trading. Um, Obviously we are seeing on the daily MACD that we are seeing a rise in the MACD, right? So we are seeing this crossover here, a bullish crossover on the MACD, and we are also seeing higher lows on the VIX. And this is important to note because volatility is going to set in sooner or later. We saw a volatility spike back here in July 6th of this month. And the question now is, are we going to see it happen again? If we see a pop in the VIX, it's probably going to want to break this range here of 1470. And if it moves higher and continues higher, it's going to obviously, butter right through and test this 17 level. And the next level here, higher, would be this 20 level. Now, the 20 VIX would mean that sentiment has totally changed in the market. People are really fearful of what is happening, but when we get to that point, if we get to that point, that is when we need to really assess the market and slow things down for ourselves. So that way we could get a broader look at what is happening in the market. So that way we can find our entry points with a low risk, high reward setup. So you're always going to want to look for those opportunities whenever you're trading, especially when things start to move all over the place. You always want to pick good levels in the stock market, right? Identify your levels and trade off of those levels with the appropriate size of risk. And so if you haven't already, please go ahead and subscribe to the channel. Go ahead and like this video down below, and we will see you on the next one.